Good morning, you're watching Buy Now Sell Now on ET Now with me Shreyansi Singh, and over the next 1 hour we'll get all of your stock related queries answered from both a technical as well as a fundamental perspective. Well, first things first, we've got to take a look at the markets. Firstly, when you take a look at the markets, not much to complain about as far as sectors are concerned, because we've been quite resilient this morning, barring the last few minutes where you've seen a tinge of red returning. As far as the benchmarks are concerned, so the Nifty, as you can see on your screens as well, is down 0.2%. You do have the broader markets, though, on the other hand, that are largely outperforming at this point when compared with the benchmark. So mid-cap gain of just about 0.1% coming in for that one, and 0.3% uptick coming in for the small cap as well. In terms of the sectors holding on to a tinge of green at this point, you have pharma holding up quite well, finance, realty, exactly in that order, that are holding on to a tinge of green, in fact. And on the flip side, you do have IT that is sulking away, taking it on the chin, followed by metal as well as PSE. You've seen some more sectors flip into the red as well. That is something that you've seen in the last few minutes, some weakness that we've seen coming back as far as some of these sectors are concerned. But when you take a look at some of the stocks, you do have the likes of an ICICI Bank, Indus Bank, Bharti, Airtel, Sun Pharma as well, holding on to a tinge of green as well. Those are some of your top gainers coming in from the Nifty 50. Other than that, you have on the flip side Hero Moto, that is taking it on the chin. That stock is down 2.5%. Tech Mahindra as well, Infosys, and some of those IT counters, the likes of Wipro as well. After that weak guidance coming in for the first quarter, that stock is down 6%. So that's the kind of trade that you have this morning in terms of the stocks as well as the sectors. But tell you what, let's also take a look at the number that you can write to us at for your queries. Do remember to mention the buy price for the stocks that you're already invested in, and for the ones that you hope to be investing in, mention the time horizon that you then have in mind. There you have it, the number that you can write to us at. And in fact, we do have Sharmila Joshi who's connected with us to take us through all of your queries, and we'll kickstart taking all of your stock related queries in just a bit. Sharmila, first of all, thank you so much, and a very good morning to you.
Good morning.
Well, I just wanted to quickly get your take coming in as far as the IT sector is concerned, because we do have Wipro that has come out with its number. We have Infosys that we're waiting by for in terms of their fourth quarter numbers. What do you make of the entire sector as a whole when it comes to earnings? What are you thinking of when it comes to IT?
Well, clearly the mood on the market is not in favor of IT, and I think everything that has gone down in the US over the last couple of weeks would definitely cast a sort of shadow on how this sector will progress going ahead, because this would be one of the sectors where we export the most, and that could get impacted if it gets caught in the crossfire of this entire tariff war. So, you'll have to play it by the year. In any case, I think the sector has seen a deep correction and then a bit of a recovery when you began to see that things in the US were sort of quietening down. And then once again, we have this spate of bad news. And now we are in the middle of earnings season. So a lot of things sort of point towards the fact that you could see a bit of correction in IT as a sector. To my mind, there would be stocks within that space which would look attractive going ahead. I think we've seen Wipro numbers. Those I didn't like too much. So I think the stocks that I would continue to like within the large cap IT space would be stocks like an HCL Tech or an let's wait for Infosys numbers, but otherwise HCL Tech, TCS, stocks like that. But again, here the view would have to be reasonably longer. It would be have to be an 18 to 20. So it's not going to be the first sector that we are going to see recovery in. But to my mind, the valuations are now at a level where you could look at investing from a longer term perspective.
Well, absolutely, Sharmila, not just you, right? When it comes to Wipro, I feel like the market also, a whole host of investors also chiming in when it comes to that view of not liking Wipro numbers, because that counter is down 6% at this point. Tell you what, the first query, in fact, on the show that we have is coming in from Satyaveni, who's writing to us from Hyderabad. He wants to know about IRFC, 900 shares at a buy price of 181 rupees. Also is holding on to TCS, 90 shares at a buy price of 4,100 thereabout. What do you make of both of these counters? Because Satyaveni wants to know if he should be averaging or exiting, and what price should he be keeping in mind?
Well, it's a hold for both without any advice to average at this price for either. IRFC simply because I think the stock ran up too fast too soon, and now I think we are getting into a phase where valuations and earnings are sort of coming to some kind of a settling sort of a settling zone. So the valuations still don't look cheap to warrant a fresh ad, but definitely hold on to what you have, because this overall this sector and this company should do better going ahead. I think the same applies to TCS. We were talking a little while earlier about IT, and we have seen numbers from here. Again, I think market had a sort of a mixed reaction to the numbers. But going forward, I think that you would have to be a little patient as far as IT is concerned. So look at it from an 18 to 24 month kind of a perspective. If you're okay to willing to hold on to TCS for that long, then definitely hold what you have, but don't add more.
Patience is key when it comes to the entire IT pack. That is the take coming in from Sharmila as well, and that's the take coming in as far as IRFC and TCS are both concerned. The next one that we actually have is coming in from the banking pack. We do have Nikhil Sharma writing to us from Mumbai. Wants to know about IDBI Bank. 250 shares, buy price is 81 rupees thereabout. Wants to know what is the right time to be exiting, or if he should be holding on. What do you think, Sharmila?
Well, honestly, this is not my favorite stock within the space. I think one of the big reasons why it continues to go up is that you hear of restructuring stories in that. So if that's the story you bought for, then you continue to hold. Otherwise, I think we've seen a decent enough correction even in banks, and now the sector going forward seems to be poised for better times, given that RBI is also now on a cycle where they're cutting rates. And again, I think more sort of domestic focused sectors and stocks will do better. So that said, I think that you could look at, I think even in the same size, you could look at IDFC first or something like that, or even the larger banks like ICICI or HDFC, or I think if you were to look at the PSU space, even an SBI. But I would definitely recommend a shift out of IDBI.
Alright, then that's a take coming in as far as some of those banking counters then are concerned. Sharmila, I also wanted to know what you think about Bank of Maharashtra, because we do have Venkata Rao writing to us from Vishakhapatnam about a couple of stocks actually. Bank of Maharashtra is one of the stocks that he's looking at, 2,800 shares at a buy price of 64 rupees, and United Spirits as well. 300 shares, buy price is 1,580 rupees. So what do you have in mind when it comes to both of these counters?
So let's talk of Bank of Maharashtra first. I think we have seen a correction in this stock from, as we've seen across the banking space. Now the valuations look okay. I think the buying price is, I think in 60 something, but I would give a target of 55. So keep that target in mind and continue to hold what you have. Where United Spirits is concerned, I'm more positive on the sector than the stock per se, because we've it's I think not been a stock that has really lived to its potential, given the fact that we saw management change and then greater things were expected from Diageo, etc. But we haven't really seen that getting reflected in the stock price. So I think at this level you could probably sell it and look to enter some other alcohol sort of play. I prefer a United Breweries to this. I prefer a Radico Khaitan to this, or I even prefer at current price Sula Vineyards to this than United Spirits.
A couple of recommendations from that entire pack that you should be looking at as opposed to United Spirits. That's the take coming in from Sharmila. The next one that we have is coming in from Bimal, who's writing to us from Mumbai about a couple of counters, 1,000 shares of AB Capital, buy price at 150, and 200 shares of L&T Finance as well at a buy price of 140 rupees thereabout. Wants to know if he should be adding more at these current levels, and what kind of targets should he then be keeping in mind?
Well, AB Capital definitely hold what you have. I don't know whether you should be adding fresh, because the valuations don't seem to be terribly in favor of adding fresh. But definitely, I think this stock with the new management in place and how they've been able to set their targets and deliver those targets ahead of time gives me greater confidence in AB Capital as compared to L&T Finance. L&T Finance, to my mind, has been a little disappointing. That said, you could possibly hold what you have for now, but definitely don't add fresh.
Right, so that's the take coming in on some of those talks. Very good morning to you, Sharmila. Sharmila is joining in. In fact, let me just quickly just mark the markets and some of the stocks that you need to watch out for in trade today, given the fact the way how the markets have turned around after opening up. And right now, if you look at the advanced decline ratio, very much tilted in the favor of gainers. You have ABB that is in focus on back of the parent earnings, and yes, that stock has seen a good spike over the last few minutes or so, given the fact that the commentary also coming in was not that disturbing when you talk about ABB Global. You have ICICI Bank among the top gainers today, while on the flip side, you have tech that is under immense pressure, with Wipro being the top loser on back of his earnings, miss on all counts. You have HCL Tech that is declining. Hero MotoCorp, they are taking a shutdown or cut in the outputs on back of that. Hero MotoCorp is under pressure. Tech Mahindra, Infosys are the other counters also in pressure, under pressure in trade today. And Infosys, because they will be reporting their earnings later today. So these are some of the counters to watch out for in trade today. But let me continue taking your queries then. And this next one that I have is coming in from a viewer that is Venkatesh Chalam. He's writing to us from Kochi. He wants to know about PNB Housing. 895 is the buy price that he has, and he wants to know whether he should hold on to this or look to exit this one. And the other stock that he has in his portfolio, Sharmila, is KPIT Tech, 100 shares at a price of 1,312 rupees per share. What should he do with both of these counters? What sort of a strategy to adopt for both of them?
So we've seen a little bit of buying, honestly, coming into the housing finance companies. One, I think, is of course the fact that they had corrected, and I think they were sort of given a little bit of confidence by the fact that RBI cut interest rates, which would mean that home rates will get cheaper going ahead. And the fact that some of these housing finance companies are sort of targeting, the slightly smaller ticket size loans, and given their sort of distribution network and where their AUM stand, they would gain if we were to see this interest rate cycle continue. So from that perspective, I think for me, PNB housing is a hold. I think you can continue to be a little patient, but given the fact that the cycle is turning, definitely continue to hold. Coming to KPIT Tech, again, we've spoken extensively about IT as a pack. What I would think is that the mid-cap IT sort of form a separate basket of their own, because when it comes to returns, honestly, they've given better returns in that sense than a lot of the large cap IT companies, and I think KPIT Tech is a good example of that. At current prices, the valuations do look reasonable, but I think you need to keep your eye on the sort of ground as to how this entire tariff situation develops going ahead. And I don't know specifically, honestly, what is the breakup of their revenue coming from US, etc. So I think those are things that you need to factor in. But to my mind, I think for now you continue to hold what you have and be a little patient.
All right, so that's the take on KPIT Tech as well as PNB Housing. But on that note, we slip into a break in this edition of Buy Now Sell Now. When we come back, continue taking your queries. We'll also have Osho Krishan joining us on the technical, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get your answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that's flashing on the top of your screen. And each time you write to us, do mention your name, the stock that you're looking to invest in. Mention that name as well, along with the buy price, the quantity, and the time horizon. In that way, our experts will be able to help you better. And talking about our experts, we have on the technicals Osho Krishan, who's joining us right now. While on the fundamentals, we have Sharmila. Once again, good morning to you, Sharmila. Good morning to you, Osho. Thank you so much for joining. Let me continue taking the query then. And this next query that I have is coming in from Indus, is writing to us from Kolkata. He wants to know about Bharti Airtel. He has 20 shares of Bharti Airtel in his portfolio. Osho, at a price of around 1,678 odd rupees, held for 2 months, and luckily he is in profit with this particular counter. Can he hold for 2 years, and at what level can he add some more? Bharti Airtel being one of those bellwether counters, in fact hitting record high levels in such an volatile or uncertain times. What's your take? Do you think add some more, hold on for the next 2 years at least?
Very good morning. First of all, thank you for having me at the show. Well, yes, Bharti Airtel has shown a very strong resilience even in the falling market, and in the last few trading days, there has been a very strong breakout also. So it has been a multi-week breakout for Bharti Airtel, and I have a very positive outlook for Bharti Airtel for short-term and for medium-term perspective, because on the technical front, we have seen a consolidation breakout from the zone of nearly 1750, 1760 kind of a zone, which has a range of nearly 150 to 200 odd points. So immediately 1950 is the target that I am expecting with the kind of breakout that it has seen on the weekly time frame chart. So definitely one should stay invested in this counter for immediate target of 1950 for short to medium term perspective. And looking at the longer term perspective, yes, this counter has been an outperformer and there has been a continuous upstream in this counter. So one should not, if not required, one should stay invested in this counter for a longer term period also. For shorter term period, 1950 is the target. Once it breaches the zone, then we need to review on the technical front. But as of now, I am expecting 100 more points of rally in this counter.
There you go. That's the take coming in as far as Bharti Airtel then is concerned. Sharmila, I'll come right back to you. What do you think about Indus Towers? Because we do have Manjula writing to us from Chennai. Wants to know about Indus Towers, 100 shares at a buy price of 231 rupees. Has been holding on for largely the long term, but what do you have in mind for this one?
I think you can continue to hold what you have. There is a sort of a developing story here, as well as valuations look reasonable. So I think be a little patient, but continue to hold what you have.
All right, so that's the take coming in on the stock. Let me take this one from Sanjeev Patak, writing to us from Kolkata. He wants to know about Geo Finance. 242 is the buy price that he has for this counter. And about Ireda, which he's purchased at 175 rupees per share. What's your take on both of these counters, Sharmila, Ireda as well as Geo Finance? Do you think these are now okay bet to stay with?
Also, I like Geo Financials. I think the only sort of caveat that I would have here is that this is still a developing story. They have said that they are going to do many things and they have the potential to do a lot of things. But given the fact that who their promoters are, what their strength is, etc. All that said, I think it has to sort of result in begin to show results in the next couple of years as to what are the areas they get into and how they do over there, etc. So if you have that kind of patience, I think definitely stay put with Geo Financials. Coming to Indian Ireda, I think again a sector that I like. Within that, the valuation of the stock is reasonable, so this would also be a hold.
And as far as that particular counter is concerned, but the next one that we actually have, Osho, is coming in. And first of all, a very good morning to you, Osho. The next one that we have coming in is from Tina, who's writing to us about Tata Power. 1,000 shares at a buy price of 103 rupees. What do you have in mind when it comes to this counter as well?
Very good morning. Yes, looking at the technical perspective of the overall power sector, I am expecting that the whole power sector is into a very strong consolidation phase. Tata Power specifically has seen a kind of a very strong rebound from the strong support zone of 330, 340. And in the last few couple of trading weeks, there has been a strong consolidation in the counter. So overall, the picture continues to be sideways to positive for Tata Power. I am expecting a breakout once the counter breaches the zone of nearly 385 to 390 on a decisive or on a closing manner. From there onwards, we can see a decent movement of approximately 80 points on the technical front. So I'm expecting a target of nearly 460 to 470 from a short to medium term perspective, but there will be a gradual move. It's not that it is having a very aggressive move is expected in this counter, but I'm expecting that the bottom has been made in this counter and one should stay invested and even can accumulate more at current levels.
All right, this was coming from Krishna, writing to us from Chennai, wants to know about Dabur India and HUL. Makes sense to buy right now for a long-term perspective. Sharmila, also, instead of, if not that, then does it make sense Bajaj Finance and Bajaj Auto? Which one of the pack would you choose? Do you think Bajaj Finance, Bajaj Auto, or do you think Dabur HUL makes sense?
Well, I would actually put my money on Dabur HUL for the simple reason that FMCG was a sector that we have been seeing in pain over the last, I would say, 3 quarters. Given the fact that the kind of data that we were getting about slowing consumption, rural consumption slowing down, etc. And I think that going ahead, we will be, as we were discussing a little. Though of course, I think Bajaj Finance and Bajaj Auto are sort of internal looking companies in that sense. Except Bajaj Auto has a lot more export in their books now. So I think all things considered, the valuations the stocks are at and the sector that the stocks are in, because we are talking of 3 different sectors when we look at these stocks. So I would like to put some money in FMCG at this point in time, and I think that Dabur and HUL are good stocks to invest in for the longer term.
Coming in as far as Dabur and HUL are concerned, tell you what, Osho, I want to know about a couple of counters because we do have Satya who's writing to us about Siemens as well as Adani Total Gas. What do you have in mind when it comes to both of these counters? Because Satya is asking for levels that he can keep in mind when for fresh buys, in fact, for both of these counters, and is also asking for alternatives when it comes to banks. Now, we've already talked about some of those banking counters from both private banks as well as public sector banks previously on the show, but what do you have in mind in terms of alternatives to both of these counters and fresh buys?
See, firstly, for Adani Total Gas, this counter has been into a very steep correction. There has been no strong rebound in Adani Total Gas. So I'm not expecting that until it gives a very strong breakthrough above the zone of 680 to 700 kind of a zone, we might see some kind of a sideways. We might see some kind of sideways momentum in this counter. But overall, I am expecting that whole Adani Group companies, comparatively to the whole Adani Group companies, one can look for Adani Ports and Adani Enterprises to invest from a medium to long-term perspective. Now, coming to Siemens, the technical front is kind of having a kind of a resurgence or a rebound in the recent period. The counter has started gaining some buying traction, and there has been a cycle of higher highs in this counter. So I'm expecting that there can be a gradual up move in this counter towards the zone of 3300. 3300 is a very crucial and critical resistance level, but from here onwards, approximately 500 points of rally can be seen in this counter from short to medium term time frame.
All right, let me take this next one. Then this one is coming in from Deepak Desai. Wants to know about CESC. He already has a stock at a price of 152 rupees per share for the short term. Wants to know how does it look on the charts to you actually, Osho?
You see, looking very positive to me. There has been very multiple reversal kind of a breakout in this counter. Firstly, it was seen around the zone of 140, 145. Then again, it is on the verge of giving a consolidation breakout approximately around the zone of 155 and 56. And today there has been a consolidation breakout. If there is a kind of a follow-up buying emergence in this counter, then we can see a gradual move in the coming period. I'm expecting a target of nearly 170 for a very short-term perspective. Two major reasons. One, there has been a breakdown from the zone of 170 in the recent period. So once it is now acting as a neckline of the breakdown. So if it moves above the zone of 170, then we can see continuation on the higher end also. So 170 is the immediate target, and one can stay invested and even can accumulate at these levels for a target of 170 in the very short term perspective. If there is further development, then we need to review and we can even hold for a longer target also.
And that's about CESC. The next one that we actually have is coming in from Vinod, who's writing to us from Gurgaon, Sharmila. He wants to know about ITC hotels. 100 shares at a buy price of 175 rupees. And Vinod has mentioned that he's a long-term investor, wants to know if he should be adding more at these levels. Sharmila? So tell you what, let's next query for now. The next one that we actually have is coming in from Yoga Rani Osho. He's writing to us about from Saudi Arabia about Canara Bank at current levels. For the next 3 months in mind, what kind of targets are you expecting when it comes to Canara Bank then?
See, firstly, it's very nice that people from abroad are investing in Indian equity. So that's a very positive outlook for overall Indian market. And coming to the technical perspective of Canara Bank, that this counter has seen a kind of a sloping trend line breakout in the recent period, and overall the PSU banks are looking very attractive to me. So I'm expecting that in the coming period there is a high possibility for this counter to have a positive traction. For now, 100, 102 is the first intermediate resistance for the counter. Once it breaches the zone of 102, then we can see a surge towards the zone of 114 to 115 from short-term perspective. So overall, the outlook is very positive, and one can start accumulating or stay invested in this counter from short to medium-term time frame.
Right. I believe we have Sharmila back. Sharmila, I hope we have you on a stable line now because Shreyansi was asking you a query on ITC hotels. Vinod from Gurgaon has written to us 100 shares at the price of 175 rupees per share. He's a long-term investor, wants to know makes sense to add some more at these levels. What's your take about ITC hotels? Do you think that yes, you've already had these other hotel stocks that have been listed for a while, that is your IHCL, you have Oberoi and all those counters. But do you think ITC Hotels is now the one that will be a beneficiary of what exactly is happening across the world or the country when you talk about tourism?
Well, this is a stock that I like because I think the kind of properties that they have that we see around you are very good. I would only not add fresh, but definitely I think continue to hold what you have because, as you said, this is the sector, tourism, uh, domestically the way it is doing, it gives you a lot of reason to continue to hold this stock. So I'm actually positive on both ITC as well as ITC hotels.
And that's a take coming in as far as ITC hotels then is concerned. Osho, tell you what the next query is also. It's very heartwarming that it's also coming in from Oma, and Pratiksha is writing to us about GNFC at a buy price of 650 rupees. Hasn't mentioned how many shares Pratiksha is holding on to. But nonetheless, what do you make of this one? Because she wants to know if she should be holding on for the next 1 year and or averaging at this point.
See, overall, this counter is at a very critical support zone. It has seen a kind of a breakout around the zone of 460, 450 in the year 2022. It has again retested the zone in 23 April, and again now it has retested in the last month. So I'm expecting that this zone is a very strong support for the counter, and historically also the counter have seen a very strong resurgence from the neckline of the breakout. Expecting that in the coming future, there is a high possibility for this counter to again retain the zone of 650, 700 kind of a zone. So one should stay invested and even can accumulate further at these levels from a longer term perspective. I'm expecting that the view is very positive for me, and I'm expecting that in the coming period, in short term, 570, 560 is the target. Once it breaches the zone, then we can expect 650 to 660 as the next potential target for this counter.
All right, this one is coming in from Sudeep, writing to us from Mumbai. This one is for you actually. Sharmila wants to know about a good electronics and semiconductor manufacturing stock apart from Dixon in order to invest for the next 3 to 5 years. And if you don't think that there is any other option better than Dixon, then do you think it makes sense to go ahead and do an SIP in Dixon for the next 2 to 3 years?
It's very difficult to answer offhand, which could be better than Dixon. But so let's talk specifically about Dixon. To my mind, the stock is a little expensive, so I wouldn't really add fresh at this point in time. Definitely continue to hold what you have though. And if you get a dip in the stock for any reason, then yes, you could add this.
Alright, so that's a take coming in as far as Dixon Tech then is concerned. The next one that we actually have, Sharmila, is coming in from Balan, who's writing to us about the investment strategy that he should be following in times as uncertain as these, because he wants to know, he wants to deploy in fact some cash, wants to know if you have 5 scripts in mind, which are the top 5 counters that you have in mind for Balan?
So, I think what we've honestly seen happening over this last week is, at least that's my sense, that we've seen a lot of money coming into large cap companies. So when we saw markets correct as they did over all this uncertainty, we saw all the large caps getting bought. So that definitely seems to be a space that is giving investors the most amount of comfort in sort of uncertain times. People are not, or I would say less willing to bet on mid caps because mid caps had corrected a lot. And going forward also, I mean, everything had corrected. So the first money seems to be moving towards large cap. So over there, if I had to pick a basket just now, definitely there would be one FMCG name in it because that is a sector which has sort of had been doing badly for some time. So we've already spoken of a Dabur or an HUL, so that is something you could look at. I think pharma should also be able to sort of weather the tariff storm better than, say, the IT sector as of now. So there could be one pharma name in it. I like Sun Pharma within that space, so that could be a stock you could look at. IT space again, though I'm not expecting it to do well over the next 8 or 9 months. I think given the current valuations, it's again worth looking at if you are a longer term player. So you could look at some stock there. I leave that open to you, large cap, mid cap, pick some good name and go with that. I think definitely banking has to form a part of your buying as of now. I would buy a slightly smaller bank. I mean, all the large banks are good, so I'm not going to name those. I like IDFC First Bank at this price, so I could go with that. And I think maybe you should have a two-wheeler in the play, and I like Hero Motors at this price.
So there are a couple of stocks actually Sharmila has given. Looks like Sharmila is also preparing her shopping cart in this sort of a market, given the fact the way markets are performing. And it's the one of the key things to note is the fact that in corrections like these is when you actually have the quality stocks that actually stand out, and they are the ones that actually make are the ones that you should actually take your bet at this point in time, isn't it, Sharmila? Because yes, the correction has been a little harsh, is especially harsh for those who've actually started just investing post the COVID era. So for them, this has been a jolt out of the blue.
Absolutely brutal correction, and I think even for people who've been there for a longer period of time, because honestly, I'm not talking of the correction that happened now in these last 2 weeks, but really speaking, the big correction that we saw in September or October or thereabouts, because that had come like really without warning, and you didn't know what was the reason why markets were correcting. So that has been my problem all this while. That if you know that okay, markets are correcting because of this, then you're sort of more clear in your head and your strategy, whether you want to sell or buy or whatever. So it's been a very difficult period for all investors how to position yourself. But that is what I'm saying, that my only sense is that after this last fall that we saw, I've seen a lot of buying coming into quality names, as you put it, maybe stocks that you didn't buy because valuations were high, and now people are actively looking at them.
Right, so that's the sort of a take coming in, the fact that you should look at quality stocks at this point in time. Osho, let me come to you actually. You shouldn't feel left out. Are there any stocks that you are liking at this point in time that one can look at, especially when you talk about the charts?
Yes, there are various counters which are looking very positive, but again, I will be having a same kind of a view that one should diversify their portfolio. Firstly, from FMCG, HUL is looking very positive to me because it is at a very strong support zone. So HUL one should definitely have in their portfolio. Now, being on the aggressive side, which is having a very strong momentum, is the financial. So I'm expecting that in the coming period, banking and financial can see some kind of outperformance in the market. So one should go with financial sector like MFSL is looking very positive. Recently, it has given a very strong breakout and having a very strong targets also for a short-term perspective. So MFSL is looking positive to me from a financial front. From banking space, ICICI Bank today only has given a fresh breakout, so it is looking positive to me. But should accumulate in a staggered manner. One should not be very much aggressive in the private sector bank. Public sector bank is looking positive to me. So companies like PNB, Indian Bank, City Union Bank, these companies are looking very positive. So one should try to start investing in PSU banks also, because from here onwards, one can see a very strong momentum coming in the near future. So these counters one should focus as of now. There has been sectoral rotation in the market because from IT, there has been a very strong correction, but overall, the valuation wise and technical front wise, I'm expecting that in the coming period, there will be a very good valuation for this company to start investing. But as of now, this whole sector is into strong pressure. So that's why I'm not advising to have investment in these counters. But soon, let's say 1 to 2 weeks, I would be having the view of start accumulating these counters in a staggered manner. So IT should also be in the watch list. And in the coming 1 to 2 weeks, one should also look for buying opportunity in IT sector also.
Rather than IT is in the watch list as well as on the earnings calendar for us today, Cheryl. But a very quick breather on the show. Then on the other side, we'll answer more of your stock-related queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of your stock-related queries. In fact, the next one, Sharmila, that we have is coming in from Siddharth, who's writing to us from Bengaluru, wants to know about a couple of counters, Godrej Properties as well as KC International. With the next 3 to 6 months in mind, what do you make of both of these counters? And Siddharth also, in fact, wants to enter both of these, wants a fresh buy when it comes to both of these counters, Godrej Properties and KC International.
Well, first of all, it's a great idea to start buying at this point in time, but my only advice would be to not buy everything together, because markets are still pretty much I would say we don't know which direction they are going to go, because even I think the tariff, if you take that as a reason for the correction, then we have a 90-day sort of period, and you will get a better sense of how things are progressing as we get little later in this month and in the month of May, as to how our negotiations with them are faring, and you will get some kind of a sense. So stagger your buying is what I would say, and both these stocks I like for different reasons. I think real estate as a sector in a market like ours has a great role to play. And within that, the kind of model Godrej Properties has had, the numbers they've given, the valuations, it's that it looks good to me at this point in time. KC International, again, a sector that I like, and slightly, I think, their model would have, some export-facing elements in it. But overall, I think it's a good quality mid-cap. And once again, if you do staggered buying, then I think I'm okay with that as well at current valuation. So both are good quality mid-cap stocks.
All right, so that's the take coming in on some of those counters. Let me take this next one coming in from RK Ahuja. Wants to know about some of the counters he's mentioned, and he wants to know whether out of those counters, which are the two stocks that he can buy today, Osho. One is Trent, the other one is LIC Housing Finance, HCL Tech. Which one do you think that he should look to buy today? Two stocks out of this.
See, firstly, on the technical front, LIC Housing Finance is looking much way better because it has given a breakout, not today, but on 15th April, it has given a very strong breakout and there has been a continued momentum in this counter. So LIC Housing Finance is a very strong bet and I'm expecting that in the short-term period, it can retest the zone of 640 in a very short-term time frame. So this is a good counter to start accumulating, not at a single go, but even look for some kind of a profit booking once it happens near the zone of 585 to 590. That will be an apt zone to start accumulating this counter for a target of 640. That just for a trading purpose. From an investment point of view, yes, this counter is looking very positive and one can even stay invested for a higher target also because there is a kind of a sense of a reversal on the technical front. So LIC Housing Finance is looking very positive from a trading and investment perspective. HCL Tech as of now should be avoided because overall IT space is looking quite sluggish as of now, not very much pessimistic on the technical front, but I am expecting that one should stay away until there is a buying traction coming back in the overall IT space. And coming to Trent, Trent is again having some kind of consolidation, but still it's below the bearish gap that we have seen on the technical front. So for now, one should stay sidelined from Trent also. If it breaches the zone of 5,300, then one should start accumulating this counter. Else, till that time, have patience and stay invested in LIC housing only.
Alright, then that's the take coming in as far as some of those counters then are concerned. The next one that we actually have, Sharmila, is coming in from Amit, who's writing to us from UAE. Wants to know about Mandapuram Finance, 500 shares at a buy price of 175 rupees. What do you make of this particular counters? Buy more or book profits at this point?
So this entire space, which also which is an NBFC, but also looks at sort of gold loans, etc., that comes under. You do see corrections sort of within that space, and very honestly, at this point in time, even the valuations are not in favor of Mandapuram Finance. So I would say wait to buy this. Perhaps you could look at, Osho's been mentioning a lot of other NBFC and financial names. Perhaps you could look at some of those.
All right, so that's the take coming in on Mandapuram Finance. Let me just quickly mark the markets because a sharp recovery at play at this point in time with the Nifty Bank actually seeing a recovery in excess of about 1%. In fact, Nifty also seen a recovery of about 300 points from the day's lowest point. Nifty Bank at the day's high. You have broader markets as well participating at this point in time. So yes, healthy uptick coming in for Indian markets given the fact that yes, it's shrugging off the global worries at this point in time. You have globally, if you see the US markets ended in the negative territory, but Asia fared pretty well. And the same actually trickling down to the Indian markets as well, where right now we are at the day's highest point. We're reclaiming that 23,600 mark on the Nifty on an intraday basis. So yes, healthy going or good going for the markets, at least in today's trading session. But let me take this next query then, and this next query that I have is coming in from Poonam Anand, and she wants to know about Happiest Mind. She has about 50 shares of this stock in her portfolio, Osho. The buy price is about 624 rupees per share. What's your take?
See, overall, there has been a kind of again, negative movement in this counter. There has been no respite or pullback in the recent period. The counter was hovering in a very tight and sluggish manner. And once there was a breakdown from the zone of 700, 720 odd levels, there was single side movement in this counter. So for now, I'm expecting until it breaches or until it moves beyond the zone of 660, one should stay sidelines from the counter. But already, if the person is having a position in this counter, then I will advise to keep a strict stop loss of nearly 545 for the counter and try to look for exit opportunity around the zone of 660 to 680 kind of a zone.
Next one that we actually have is coming in from K. Venugopal Reddy. Sharmila, he's writing to us from Hyderabad, wants to know about LIC. Can this counter be bought or average the current market price with a 12-month time horizon then in mind? Because he's already bought 115 shares at a buy price of 1,000 rupees. Currently, the stock is in fact trading sub those levels, so around 800 levels is where you have LIC at this point. What do you have in mind when it comes to this counter?
Honestly, ever since the stock listed, we haven't really seen it perform to its potential as far as stock price is concerned. And I think the big reason for that also has been the kind of market share that the private insurance companies have taken away from LIC. The kind of inroads that they have made. So, to my mind, the private life insurance space looks more attractive than LIC at this point in time. My advice has been to buy a sort of a basket of the three players: HDFC Life, SBI Life, and Pru Life, and because they have different sort of strengths and different advantages at different points in time. So life insurance is a space that I like, so that would be the strategy that I would use.
All right, so that's the strategy that ideally Sharmila would adopt when you talk about the insurance space in particular. This one is coming in from Sudeep. Wants to know, in the textile space, first of all, is textile space a good bet at this point in time, given the fact what is happening globally when you talk about the tariff tensions, Sharmila? And if you believe so, then which textile play that you think one should bet on right now?
Well, I'm actually very confused at this point in time, because the good textile plays that we used to like were the people who were supplying to the large chains in the US, like a Walmart and things like that. So how does this impact them, and how this entire thing plays out for them remains to be seen. So I would actually wait for clarity on that before I took a call on this.
For clarity on that, given the fact it is very confusing, and it's a difficult task actually for you guys actually to pinpoint or plot which sector stocks one can look at, given the fact that we are in a very uncertain environment, isn't it, Sharmila?
Absolutely, and you don't know what happens on day 91, which is why I feel that we'll get more clarity as our talks progress in May. My feeling is that there will be some understanding over this whole automobile issue. Maybe Tesla will be allowed entry into India with some concessions, etc. So we should wait and see how that plays out. But at this point in time, it's honestly too confusing.
All right, then it is pretty confusing, and these are uncertain times for sure. But thank you so much, Sharmila, as well as Osho, for joining us and answering all of those queries very patiently. Unfortunately, those were all the queries that we could pack for you on this edition of Buy Now, Sell Now on ET Now. But tell you what, it's time to take a look at IT major Infosys, because that's the next in line to release their fourth quarter earnings. In fact, the street is penciling in a decline in revenue when it comes to constant currency terms. What is expected to weigh on margins? We do have Ansh standing by to give us that update. Ansh?
Well, revenue in CC terms is expected to decline by 1%, whereas in dollar term it is expected to go down by around 1.4%, and this top line could get impacted mainly from weak seasonality and discretionary spend, also by less number of working days. However, revenue in rupee terms is expected to go up by around 1% to 42,198 crore. Now, if you talk about margin, then that is expected to go down by almost 80 basis points from 21.3% directly to 20.51%. Whereas if you talk about profit, then that is expected to go down by around 1.4%. Also, let's talk about guidance for FY26, and here Street is expecting FY26 guidance to be 2 to 5% in CC terms, whereas margin is expected to remain unchanged between 20 to 22%. Now, apart from this number, there are 5 other key things to watch out for. First is management commentary on demand. Second is US and BFSI segment performance. Third is deal pipeline and Gen AI impact. Fourth is discretionary spend outlook. And fifth is headcount and attrition trends.
All right, thank you so much for that, Ansh. We'll definitely watch out for Infosys when they report their Q4 earnings later today. But on that note, we're totally out of time on this edition of Buy Now, Sell Now. It's in fact the last edition of this week for Buy Now, Sell Now. So it's a goodbye from Shreyansi, myself, Snehi, and our producer Somashri. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.